we've got on the stage right now Nick Merten. He's a very popular guy in the crypto space. We're all excited to see him here, so thank you for coming, and I'll hand over to you. Thank you.
Awesome. Thank you very much. I want to thank you all first and foremost for having me here all the way here in Vilnius. Lithuania is the 10th country I've gotten to visit, and this has been my first year traveling internationally, so it shows what crypto can bring. Outside of that, though, today, I want to spend some time to give you all a little bit of understanding real quick about who I am and what I'll be talking about. My name is Nicholas Merten. I am the founder of DataDash. It, right now, I think, is the largest cryptocurrency YouTube channel. It's been really extraordinary. I started it actually about a year ago from today, and it's been an awesome experience because I've had a background studying traditional finance, traditional markets, trading in stocks, bonds, ETFs, and it's been an extraordinary journey stepping into this exciting market of cryptocurrencies. And we're going to be talking a little bit about today how disruptive cryptocurrencies are in the space of the financial sector and how big money, generally referring to banks, hedge funds, family funds, the whole institutional space, how it's getting involved in cryptocurrencies. And a lot of the misconceptions that people have in the space as well, so I think we're going to start there. So I want to start off by kind of getting a general consensus here. Who thinks that institutions like cryptocurrencies? Let's get a show of hands. Not many hands for the most part. And the reason why that's the case is because of what we see. We try to understand things, I think, in regards to where people are taking positions and different types of markets and different types of trends. But what we tend to see in regards to the financial sector is how the media covers it. And I would say that our vision kind of goes along the lines of something like this, or in pretty simple human terms, something like this. And the reason why is because we see it as a direct threat and competition to the financial sector. And we get the impression that traditional finance, all of the sector of traditional finance, the global financial sector, does not like cryptocurrencies. And for the most part, this is relatively true. It is probably the biggest disruption in the past dozens of centuries of human history in the financial sector. The mechanics of monetary policy and currencies have not changed for a very long time. And they still hold the same inherent flaws of failed centralized control, continued failures in monetary policy of financial regulators and closed groups to regulate economies and to manage the policies tied to their currencies. So we can understand why banks and large financial institutions that have a stake in these massive multi-trillion-dollar currencies that run the global economy, why they would not want something like cryptocurrencies. But we also have a misconception that banks run the world. There's a very, very large sector that is the financial sector that's broken up into a variety of different components. But when we look in the media, we tend to find some of the big heads in finance getting all of the coverage. And they have nothing positive to say on cryptocurrencies. You go through what Jamie Dimon said back in October and November, the CEO of JP Morgan and Chase, one of the largest commercial and investment banks in the world. You have Warren Buffett, the infamous investor that everyone apparently loves, and Augustin, as well as other regulators in the BIS, the IMF, the World Bank, the Federal Reserve. I mean, you see some serious high-level individuals talking negative about cryptocurrencies. So it gives off a negative stigma, and it almost builds this we versus them mentality against those who have worked in traditional finance for decades. But the thing I really want to emphasize, and we're going to see throughout this presentation today, is that banks are not the only individuals in charge of the financial sector, in charge of your money, in charge of managing money and catching on to new trends. And we're going to see just how disruptive cryptocurrencies have been. There's a war inside the world of finance because there are different values. There are different players with different interests. And many people see the potential of this market, and they want to capture some of that potential themselves. So I'm going to be talking about two major ways outside of the more kind of well-known ways that people know traditional finance gets into cryptocurrencies. And I'm going to start off generally by talking about initial coin offerings. Now, this space is rapidly changing. I think many people have different opinions on the future of initial coin offerings, but we're getting a very clear picture as to how much money is flowing into initial coin offerings or ICOs. It has been a massive competition with traditional venture capital and finance. So right here, we have a great visualization of the past 4 years of ICOs. That small pink dot you can see on the screen was what was known as Mastercoin. It was the first ever ICO. Definitely nowhere close to the kind of valuations that we're seeing nowadays. But it was an idea. It was an idea that you didn't have to trust a group of VCs to bring something to life, that you could instantly bring capital as a community and come together and build these digital ecosystems, Ethereum being one of the ones that we know today as the second largest cryptocurrency. And what Ethereum really showed was that there's an opportunity here to take this model to scale. And for some time, no one really picked up on it. Small projects tested it out, tried the same means of doing token sales, but we really saw that capital can be brought to the stage with an idea with the DAO, or the Decentralized Autonomous Organization. And a few months later, people started to realize that this trend was not going to settle, that venture capital itself, the space of unicorns like Facebook and Twitter that were multi-billion-dollar centralized companies, was not going to be the model of raising capital any longer. And from there, in 2017, we hit one of the greatest changes in financial capital history. So the crazy thing about this as well is that this is just 2017. This whole chart here really is where we saw the majority of the growth, beginning in 2017 towards November. That's where this video stops, and this diagram really shows how far we came in 1 year. But the crazy thing is that this isn't slowing down. It might seem like things are slowing down in the crypto space. I think all of us have looked at the charts and maybe our portfolios. But we know that when we analyze the ICO space, we're actually still seeing higher levels. So we can see here that we actually just had the biggest month in ICO raising history in June. We closed 2 massive ICOs, one for a famous messaging application known as Telegram, which happens that a lot of people in the cryptocurrency community use. And then also along with that as well, EOS finally closing off its multi-billion-dollar raise over the past few years. So because of that, we have a massive candle spike here. And we still have a numerous amount of ICOs that are still launching within this space. So the model itself isn't dying, and they're raising more and more capital. So who's providing a lot of this? Well, we obviously have some retail investors in spaces where they can partake in ICOs. But for the most part, it's institutions. And the entire venture capital space has been turned on its head because there used to be a very traditional model of putting money into early stage startups, whether you were an angel investor or part of a larger VC. And you can see since the dot-com era, this has been a trend where people have put money towards early stage companies, hoping that they're going to land the next Facebook, that they're going to land the next Google in that sense. And we can obviously know as the dot-com bubble led to the craze of the internet, things started to cool down, but eventually they rose back up to a more stable rate. And again, this led towards a lot of great companies coming into fruition. But we can start to see, comparative to what many startups start off with, something around $500,000 maybe in their first initial round, we're starting to see that ICOs are raising more and more each year. Whereas Ethereum, the second largest cryptocurrency, only raised $14 million, we just saw EOS close an ICO that raised well towards $3 to $4 billion. I mean, that's something to marvel. It's something to notice. And to think that institutions are putting money towards this, there's obviously something here. The traditional means of venture capital worked in a very simple way. It was this idea that you find early stage projects, again, hoping to find a unicorn, hoping to develop that project, provide the capital means so they can gain the resources to expand and build a user base, and then once that user base is kind of acquired in a sense by the brand, milk the hell out of it. Profit, profit, profit. And then eventually, once you have profit to show, to exit, to go public in an IPO, and let someone else handle the company and rinse and repeat, find another company. And this model itself worked pretty good. It's led to a lot of interesting companies. And this whole kind of model itself is what led to many of the startups that eventually came into the tech giants we know nowadays that we use on a daily basis and are in our pockets 24/7. But there's a few issues here. The first one has to do with compromising values. And this is sometimes more of a moral rather than a business point, but we have to consider the fact that when you're building these great startups, for example, there's the story of Steve Jobs with Apple and everything, and how he wanted to build a personal computer, and he really wanted to focus on the experience of the user. And then over time, we saw that the shareholders were able to gain control of the company, misdirect him from his own company, and eventually, sometimes that not only leads towards moral questioning for the longevity of a company, but also its business standing. And Apple went into the gutter for a few years until he finally returned. And then we also have other values as well. We talked recently about the Facebook data breach, for example, where individuals had their personal information utilized for political advertising. And we have to ask whether or not, how much data should we be giving up? We understand we need to monetize these companies, but when do we draw the line for compromising values? Along with that as well, inside the traditional model of venture capital, you have a lot of people who are hoping to get unicorns because it's the only way they can exit out of their investments. When these become multi-billion-dollar companies, not everyone can easily buy stake in these companies. And because of that, there's a lack of liquidity. There's a lack of movement of money to be able to sell the ownership that you have in something. And that's something, again, that we'll talk about how ICOs fix. But the biggest thing as well, I think, that's going to lead towards one of the largest financial revolutions once regulation thins out, is we're going to be able to see that this centralized opportunity that was venture capital, that was in the hands of a few hundred or thousand individuals in key areas like Silicon Valley, is going to become something that anyone can partake in. So let's talk a little bit about why the ICO model is so big. Well, first off, it fosters ecosystems. Again, a lot of these projects are open source. They're open for anyone to contribute to partake in. And with the mechanism of having a token, we start to realize some power behind the opportunity that lies within these ecosystems that don't have central authoritators and rather replace themselves with decentralized autonomous organizations or other means of consensus. We also see as well that we can reach towards collective goals. So this doesn't always just have to be about the bottom line of profit. We can really start to see some extensive features come out of these things where we can find decentralized systems not only provide value in removing trusted third parties in finance, in supply chain logistics, in identity and data management, a variety of applications, but also to bring about moral values that we all stand for, collectively working towards a greater cause. And also the benefit of sharing the value both morally and financially. The big point here, though, is that the tokenized metric of ICOs, it changes the entire incentive structure, and this is the selling point here. Because in traditional VC, not only was there centralized opportunity, but the bottom line was profit in that sense, right? It's how most businesses operate. However, in this world of tokens, you start to see some changes here. Because you have a variety of different people in business that weren't being factored in. In the traditional world of VC, it was all about individuals at the high stakes investing in these companies, eventually turning a profit in the end. But we never really factored in all the other incentive structures for employees at these companies, people who contribute to these great projects. And along with that as well, the consumer base. How does everyone win in this process? Well, with tokens, you can do that. Think about values for a second. If you own a token of a platform, it matches a certain value set. It matches certain ideas of privacy, certain ideas of convenience, certain ideas of transparency on public ledger technology. There's a lot of interesting things that you can establish within code that acts as law for your platform, certain rules that people have to follow if they want to partake in these ecosystems. And that goes along lines of everyone. Everyone has a sense of values. And in this case, as well as with utility, if we think about it for a second, whether you're a consumer who will utilize the token for the platform, whether you're someone who's investing in the platform, whether you're a VC or a smaller scale investor, or if you're an employee getting paid in this token, I think people don't really realize just how powerful it can be, how much of an incentive it is in the sense to build utility behind it, to make it as valuable as possible, to find value at every corner. So we're not just dependent on shareholders trying to build value behind it, because sometimes they only care about the short term. Whereas if we can foster an ecosystem, we can build utility behind these different tokens. And the last thing as well is the wealth. We obviously all, I think, want to do well, even the employees of companies, those utilizing these systems, and especially those investing. So we have an entire incentive structure built into the token, whereas equity was something that was very minimal, it was very regulated, it didn't always serve the greater cause for the long term. So this is the real power behind ICOs. And I think in the next few years, everything, you're going to see not everything, but a variety of different things become tokenized. And you're going to see different value models, different ways to build up these entire ecosystems and to really see just how effective the ICO model can be in the long term. So I want to go on here to talk about something that most people don't know about. The ICO space obviously gets covered in the headlines, but many people don't really understand something that I talk about on my channel a lot, known as OTC markets. And I've been dying to talk about it because it's gotten me completely encapsulated and optimistic for cryptocurrencies in one of the times that obviously doesn't seem so optimistic in the market. We've seen prices go down a bit. We've seen Bitcoin go down from its peak in December, from 20,000 down towards around $6,000 right now. Yet, at the same time, institutions are getting more eager than ever. It's just that we don't see it because it's not happening on the exchanges or the platforms that we're aware of. It's happening in what's known as OTC markets. So what does OTC stand for? OTC stands for over-the-counter, and this is a measure where most institutions are buying their money. It's a swapping system rather than going on the exchange, as we all know. I think if people were to probably get a visualization of trying to think, how would institutions buy Bitcoin? Many people might picture the same way they would. They would think that maybe Jamie Dimon is going on Coinbase and buying his first Bitcoin like his daughter did. Well, it's not like that. It happens a little bit outside of the window that we're familiar with. But OTC is not very complicated in crypto. Basically what it is it's two different intermediaries, one with Bitcoin and one with cash in this case of some sort, and going through an intermediary, whether it be a smaller company or an official registered exchange or broker, and swapping at an effective rate. So in this case, for example, let's say we have one party with 100 Bitcoin. That's a lot of Bitcoin to go out on an exchange for. And we'll realize why they choose OTC because of this. And we also have someone as well with $600,000. It's a lot of capital. And luckily at this time, the OTC broker in the middle finds that, hey, the effective rate for Bitcoin right now, the market rate is $6,000. We can do an effective swap where we don't even have to put this on an order book on the exchange. So this is a very, very effective means for people who have large amounts of money. There's not only benefits to privacy that we'll go into later on, and we'll talk about that's why it's so private and we don't hear about this, but along with that as well, why this is effective for both the traders in this case, the institutional traders with larger money, but also for us as traders on a common exchange. And it's something known as slippage. So slippage is something that affects all markets. It can affect stocks. It can affect anything where there's a buyer and a seller. And we can see slippage go both ways sometimes. We love seeing when prices rally like this. If large investors come in and buy up a lot of cryptocurrency, it pushes the price up. The demand is starting to settle in, and the supply isn't there as much as obviously the demand is. So in that case, you get a massive move in price. And you can even see as well on the chart, this is where the big institutions were starting to buy in. You can also see as well the selling. But over here, we see a big trend to the upside where a lot of institutional volume is starting to come in rather than in the past where it was relatively thin. So we might like slippage to the upside. It might be saying win Lambo, win Moon, but outside of that, many people might be looking at this chart and saying win OTC. So we don't like when it plays the way we don't expect it to go. We only want the institutions to buy in, but we have to understand that people are buying and selling in very large amounts. And in this case, we obviously see that it can play both ways because a trade always involves a buyer and it involves a seller. So you're going to have both happen if we don't have OTC markets on exchanges where things become very, very volatile. So going on here, what are some of the institutions that are buying into cryptocurrencies? Again, I was emphasizing early on in the presentation that I think we have a big misconception that bankers are the only factor in traditional finance, and I think that's a big misconception. From what I've been able to study within OTC markets, we have a variety of different forms of finance or institutional finance that are getting in. We have family funds as well as hedge funds. And I want to spend some time emphasizing this because before I studied in cryptocurrencies, I was very big on learning about power structure in finance and learning about kind of the big players and what they do in traditional markets. But what you find is that family funds and hedge funds are heavily based in what's known as offshore havens. This is countries like Switzerland and the Netherlands, as well as offshore islands like the Cayman Islands. And this is where a lot of money is stowed away. In fact, there's been estimates that this is anywhere from around $21 to $32 trillion. So in a much less regulated space, money that, again, wants to be diversified, that wants to be exposed to a variety of markets, that's a lot of money to deal with in cryptocurrencies. And it's going to be the first level of equity, or the first level of capital, which has already started to move into the space. But we also have a few other big buyers that are coming soon. ETP providers, which are exchange-traded product providers. So we've been hearing a lot of talks about a Bitcoin ETF coming out soon, which I think many of us are excited about because it's going to open up the door for people to buy Bitcoin very simply through their brokerage account. And in this case, ETP providers who make these exchange-traded funds or different types of financial products, in most cases need to back up those funds with cryptocurrency, the actual underlying asset or commodity, however you want to see it. And though it might not be believed to be true, there have been many rumors in this private space that some banks are starting to get involved in purchasing cryptocurrency in OTC markets, which is really interesting. The one thing that could come to compete with the underlying powers who dictate monetary policy. Some of them are starting to realize it's that disruptive, and that if they don't expose themselves, they might lose everything. They might not have any standing on their actual purchasing power or the money that they have saved and invested. So how much money are we talking? How much is dealing in these markets, and where are they doing this bidding? Where are they doing the trading? Well, the OTC market is very gray. It's generally the twilight zone of cryptocurrencies, whereas we don't even understand what's happening on the exchanges, what larger whales in the space who have mined Bitcoin early on are doing. How do we get a picture of the OTC market that's relatively private? Well, we know that there's a few different exchanges that have come public and talked about the kind of levels that they trade. We have some that are more well-known in the crypto space. We have Kraken, we have, for example, HitBTC, some more relevant names that some of us have probably traded on that also offer OTC trading. And this is anywhere from a few 10 million to 100 million per month in cryptocurrency trading. And then we start to go across the board and see that it expands to much larger levels. We have DRW Cumberland. We also have Circle, as well as other players such as Genesis that are processing around $2 to $4 billion a month. But the big money comes in a big gray area. This is the off-exchange transactions for OTC. This is real hardcore OTC. And when you talk about some of the large family funds and a lot of large individuals in the financial sector, many of them are trading off exchange. Why? Because they want privacy. And when you really get a picture of what this looks like, it might seem kind of silly, but at the same time you can understand how effective it is. Something that I always tell people that kind of throws them off with OTC markets, I was told it when I was visiting a trip back in Thailand with someone who worked in OTC markets, was that they reached over to me and they said, "Nick, what do you think the largest exchange is in cryptocurrencies?" And you probably think of the standard ones, Coinbase or Binance or some normal exchange that we trade on. And she said, "No, Nick, it's not. It's Telegram." And I was kind of thrown back a little bit. I was like, that's not even a trading application or an exchange. How is it the largest exchange? And it's because OTC works with an intermediary and bringing people together to trade large quantities. And Telegram does that great. You have encrypted chatting. You also have Skype, for example, where many of these trades happen. We don't have a figure for this because it's practically entirely private, unless you actually work in OTC markets, and in this case. But we are pretty confident, people who have analyzed the OTC space, people who work in it, who get to see the kind of numbers that are trading, that the amount of volume we see in OTC exceeds that of actual exchanges at the moment. And that shows you a good picture of what the institutions are doing, because they're generally buying from people who aren't bearish. They're people who have mined cryptocurrencies, people who have large stakes from the beginning, who probably obviously want to hedge their positions and diversify. So there's a lot of buying pressure right now, a lot of people who want to get a large stake. And it's all those people we talked about earlier, the family funds, the hedge funds, and yes, even both exchange-traded product creators and banks. So there's a lot to take into account there that we have no official number on, but we know that it's billions of dollars on a daily basis, which is really, really exciting. So I want to talk a little bit more about potential here, because we can talk about what what institutions are generally doing with cryptocurrencies. We can talk about how they're very optimistic rather than what they say in the media. But the question is here is really, what market are we dealing with, and how big can this get? Because many people, I think, have differing opinions on what cryptocurrencies really are. There are a wide plethora of different objectives, different ideas, different ecosystems. Each ICO is selling you to be the next Bitcoin and do something greater than the last. And because of that, it's hard to get a picture of all of this. But even though there's the speculative investment side to cryptocurrencies, where we expect some type of return in these markets, what we're really dealing with is an emerging currency market. These are cryptocurrencies. Some of them can be seen as securities, some of them can be seen more as utility tokens. No matter how you see it as, the mass majority of cryptocurrency valuation is in the application of currency, and I think it's the best application for using blockchain and decentralized systems like DAGs. So when we're dealing with an emerging currency market, let's understand really what features cryptocurrencies bring. Why is this different than traditional currencies? And how big is it compared to traditional currencies? Well, right now, cryptocurrencies are sitting nicely around $250 billion. And if you were to say that number to most people, they'd probably say that's overextended, it's not worth that valuation, and that's probably going to be where the peak is. Well, back just a few months ago, we were sitting around $800 billion. But even though that number seems so large, it's actually quite minimal in the grand scheme of the world of finance and currencies. If we take it into scale, we'll see just how minimal cryptocurrencies are comparative to traditional currency markets. Now, this number is a relatively controversial number. It depends on how you measure currency. But the lower figures are estimating that currency markets stand at around $84 to $200 trillion, and it depends on the types of money supplies that you factor in, M1 and M2. But even if we were to take the conservative number here of 84 trillion, think about the distance of where we still have to go with cryptocurrencies. And we have to understand what these currencies are as well. You know, we've been talking about traditional finance here. I mean, really, if you understand what money is, it's pieces of paper or numbers in a centralized database of banks who have continued to fail at managing monetary policy. It's not backed by anything. It's backed by the trust of the economies and those who regulate the currency to have sound regulating policies. But with cryptocurrencies, we have utility. We have, in many cases, immutability, censorship resistance. We have the ability to send money from here in Lithuania all the way over to countries like Japan, whether it be $5 or 100 million in a matter of minutes and for a fraction of pennies. That's something that's been unheard of in a world where remittance payments can take days, weeks, and cost dozens of dollars to send any standard transaction, or hundreds of thousands to millions if you're doing large wire transfers. So there's a huge value set here, and there's still so much room for growth, at least in my opinion. I can tell you in the 7 years that I've studied financial markets, I've never seen something so disruptive and something with so much potential for expansion. So the best thing I can say to summarize things up is that when you hear in the media, I thought I had to throw in a little joke there at the end. When you hear Jamie Dimon and the major figureheads of finance come out and say that cryptocurrency is a fraud, that it doesn't work sound as currency, and they treat it as something that will never be able to expand into a massive, well-developed and usable market of currencies and exchange of value. I would always say to not follow the FUD and to not follow the FOMO that many people promote, and rather follow the money. That has been my policy as I study traditional financial markets, and here in cryptocurrencies, I'm doing the exact same thing. The only thing I can say is that I've been very, very excited about what I've seen, and I hope you are too. Thank you.